So if your guest is here, Coach,
Yeah.
Be my guest.
He is, and in fact, it kind of reminds me of the Beatles' Magical Mystery Tour, as Mystery Trader 99 joins us today. So everyone put on their anonymous mask for the interview. Great to have you here. So I have two. I'm going to go with this one. It's at Mystery Trader 99, and making you the presenter now, my friend, and stick around for this presentation by Mystery. He's going to talk about things very telescopic on fiat, and we'll also cover crypto. And it's going to run a little longer, but he's worked very hard on this presentation. And thank you so much, Mystery, for dropping into F.A.C.E and sharing your work with us today.
Dale, it's a pleasure to be with you today.
And I have to start here. Why Mystery Trader 99? Are you the Julian Assange of the trading world?
I wouldn't go that far. No, definitely not.
Okay. Because he's in chains right now, buddy. So you don't want to model your career after him.
No,
right?
clearly not. Clearly not. It's actually a really funny story. So for those that don't follow me on Twitter, obviously I'm more of a private guy. I like to kind of be low key. I'm not really much of a social media guy, and I wasn't for the longest time. And I had been, I guess, passively following Twitter manually. Like I'd have my internet browser and I'd manually bookmark people's pages and I would follow it manually, but I never wanted to join any social media platform. So it's actually a true story. No one knows this. I've never told it before, but I wanted to join because I wanted to get 5 or 6 people's attention so I could kind of pick their brain and, about trades and whatnot. One of them is actually our guest, Henrik. You know him well.
Okay.
But on Twitter, you can't actually contact anyone directly via direct message unless they follow you. So I had to come up with a creative way to get these people's attention. So the only reason I opened the account was to start posting a couple of charts, was just to get their attention so I could talk to them. Well, one thing led to another, and I guess my charts kind of took off. And next thing I know, there's 10,000 followers when I only expected about 200. So I guess it's
congratulations.
Thank you. Never my intention. I was never trying to be actively involved. The real reason I wanted to remain private was after following Twitter for quite some time. Obviously, there's some very valuable information on Twitter, but also there's a lot of kind of riffraff, once you've been following it long enough. And I notice a lot of people tend to make the account about themselves or their ego or, brand recognition. And I never wanted that. I just wanted to put out good quality data, completely anonymously, just to see how it was perceived. And I just wanted to focus on the data and the charts. It's not about me. It's about the content and helping people with their charting, with technical analysis. And that's kind of been my focus, more from an educational standpoint.
Okay, noble goal. And thanks for coming out of the closet, even though you're still anonymous.
Yeah.
So, all right. So you gave me a little bit of a heads up of what you wanted to talk about today. And
Sure.
You have a thesis that I only heard once before. And I really didn't understand it. And when you hear,
can you see my screen right now? No.
When you hear it was some guy who had an AI system that was talking about the same thing. But like Solomon says, there's nothing new under the sun. But when I hear someone like you say something that I remember hearing a few years ago, it's kind of like having confluence of, this idea isn't just a one-off, it's in the consciousness of bankers and traders, and of course AI. Does AI have consciousness? Anyway, so I'm really looking forward to your rationale for all of this.
Sure.
So I'm not going to interrupt you. I'm going to let you go. So
fair enough. Can you see my screen right now?
Yeah, we have it.
Cool, perfect. Okay, so here's basically a breakdown of kind of some of the topics I wanted to talk about today. Before we get started, full caveat, what I discussed today, I don't have any personal political biases, or we're not going to discuss the moral or ethical ramifications of what we're going to talk about today. Today, we're purely talking about where is the global currency market, global financial markets, and how can we trade from it? That's ultimately the goal as traders. We're not here to pass moral judgment or get into some kind of, get in the weeds of a political debate, because that could go on forever. Really, we want to focus about the numbers, the mathematics. What is the data telling us? And essentially, having looked at the data for quite some time now, I begin to notice some major global macro trends. And the more I looked, the more I started to realize, I believe my hypothesis is there is going to be a global monetary reset at some point in the next 6 years, and I'll give you the exact dates. But before we get into that, the reason what led me to believe this was I began to see a lot of confluence, as you mentioned, from many different currency charts, many different commodities, to the point where there is almost a global invisible hand moving us in this direction. I'm not a conspiracy theorist. I don't believe in a lot of that nonsense, but it's in the charts. And what we're going to do is we're going to go break down through all the different charts, and I'll show you what supports this thesis. To get started, and before we can get into the specifics, I think it's important to take a look at the entire global, monetary financial system and see where we're at. And I think the best way to do that, let me see, how do I minimize this window? Here we go. The best way to do that is to first look over foreign reserve exchange, foreign exchange reserves globally. So this right here is data compiled from the International Monetary Fund every year. This is basically from the 2008 crisis up until now. How has every single currency fluctuated as far as the total percentage of global reserves? If you look, obviously the US dollar is the lion's share at 61.69%. You have the euro at about 21, yen at 5, pound sterling, and then you get into a bunch of ones and twos. The reason this is important is, over the past decade, there's been a lot of rhetoric about, the dollar being doomed, and the dollar is becoming worthless, and so on and so forth. But I think it's important to put on some perspective, for those calling, China's going to take over the world. Well, let's take a quick gander right here. China's only at 1.89% of actual global liquid reserves. For people that don't understand, China is actually a closed currency. It's not an open currency. It's not an open economy. It's ultimately still communist, although it has undertones of capitalism. But before we get into the weeds, here's actually a graphical breakdown of the actual chart. You can kind of see how it developed over the years. Obviously, it used to be the Deutschmark, and then the French franc, and then there were a couple in the other category that all merged into what is now the euro. And if we look at the dollar from 1995 until now, it's always been between about 59 to 65%, which is where it's at today. Well, why is this important? Why are we talking about this? Well, I think in order to get a clear frame of reference, I think it helps to use an actual analogy. I think that will kind of make sense. And once I do, it will kind of tie in back into the currencies. Here we go. I think our solar system is probably the easiest analogy to come up with. And the reason I say this is because, although it's not exactly to scale, it kind of is pretty accurate. So we have the sun, which is the US dollar index, or US dollar in general. Then you have Mercury, Venus, Earth, Mars. This is your, Swiss franc, your Australian dollar, your Canadian dollar, and so on and so forth. You have Jupiter, which is the euro, Saturn, which is obviously the yen, and then you have Great British pound, and so on and so forth. Well, why is this important? I have a question for you, Dale. I'm curious if you know the answer or not.
Okay.
Do you know how many years it takes for all the planets in our solar system to be in quote unquote perfect alignment?
I don't.
Well, it's exactly 3,053 years, if you were curious.
Oh, wow.
To put it in perspective,
Pretty rare event.
the last time it happened was 561 BC, before Christ was born. That gives you a perspective of how long ago it happened. And the next one's going to happen May 6th, 2492, which is exactly 1,000 years after Columbus sailed the ocean blue. So this is a frame of reference of how rare of an event this is. And for those that don't follow astronomy, they call perfect quote unquote alignment is less than 5 degrees. If you go less than 1 degree, it's actually 284 million years. So it gives you a perspective just how rare something like this happens, where everything happens to be in perfect alignment.
Okay.
Well,
Really
how does this relate to, how does this, and by the way, for those that are, the gold bugs out there, where's gold? Well, gold would be the center of the Milky Way galaxy, because ultimately that's where all these rotate around. And gold is truly the only real universal peg. Its value although from a dollar standpoint fluctuates all the time, from an absolute stance, it's always been the same. So at what point does, mathematically, Dale, at what point would currencies be in perfect alignment? What mathematical round number?
$1.
Correct. 1-to-1 parity.
Yeah. Yeah.
So if we go back to 1 second. So here we go. If we go back to this chart, if you look at this chart, well, which one obviously cannot hit parity? Yen is out of the question. It's obviously way too far. Renminbi is obviously way too far, but because it's actually pegged, it kind of acts like it's at parity, even though it's technically not. But if you look at the rest of the currencies, roughly 90.42% of the world's currencies are now within shouting distance of parity.
Yeah.
Why is this important? Well, I'm going to propose an alternate theory to what a lot of people have been saying. I mean, if you've been listening to the rhetoric of the dollar over the last decade, the sky is falling, cash is trash, the dollar is doomed, China's going to take over the world. I mean, this is what we hear. So in that scenario, what would you think the dollar chart would look like, going up or down?
They try and bring the dollar up to bring the euro to parity and the pound to parity.
What I'm saying is this is basically what the actual US dollar monthly chart looks like.
Okay.
And had you been listening to the rhetoric, it would have looked like it would have been the exact opposite, right? Everyone thinks the dollar's going down. Well, we've actually been in a very strong secular bull market in the dollar for almost 11 years now. Well, technically 10 years. So I think it's important as traders for us to filter out the noise and, what's in the financial news and the rhetoric out there, because oftentimes it distracts us from what's really happening in the bigger picture.
What is most obvious is obviously wrong. Joe Granville.
Correct. And sometimes I approach trading much like, any scientific experiment. You have your hypothesis, and then you look at your data and whatnot. But ultimately, I think you need to look at the data objectively first before you come up with an opinion, because opinions in themselves can be very expensive mistakes. You don't want to base your analysis on some emotional feeling when the tape is telling you something else. And to me, I always try and look at every chart dispassionately, without any emotion, and just look at what is the chart trying to tell me, and just listen. And I think it's important for us to kind of take a big step back. Sometimes we get so caught up in the 10-minute and the hourly and the short-term charts that we don't take a second to stop and take a look around and see, okay, where are we right now in the big picture? What's happening? So I think
what's the longest term chart that you give credence to? Monthlies?
Yeah, a monthly candle. I don't go beyond monthly.
Okay.
Once you get into yearly candles, it's just kind of, well, first off, most data services don't even provide it that long, and the technicals just become too choppy. You can't even really gain much data from it.
Well, who's going to live long enough to see a nice formation develop on a yearly chart? So anyway. So I'm in my 60s, and I have to wait till I'm 85 for a pattern to complete.
Yeah, basically. Right?
Okay. Well, I money comes and goes. Time is gone forever. I can't wait. I can't wait. So anyway, monthly is the answer.
Yes. And on that front, you know, I'm a firm believer weeklies trump dailies and monthlies trump weeklies as far as accuracy and which one has more power or say. So it's always important to kind of take a look at, you know, market makers are masters at playing games of daily candles. I mean, they're great at that, but it's harder to manipulate a weekly or a monthly candle. You just can't, because ultimately, you know, when for instance this pattern on the screen now, I mean, it's as clear as night as day. You know, you can't fake that. It's there. The boundaries are clear cut. It's very decisive. It's more accurate from a technical analysis standpoint. So let's go into the next one.
You want to hear a market maker joke?
Yes, go ahead.
Okay, well, I just blew the punchline. But anyway, this father and son are in the restaurant, and the kid has a quarter. He keeps playing with it and putting it in his mouth. And his dad said, "Please stop doing that, son. You know, you could swallow it and choke on it." So he turns around, he's eating, and all of a sudden he notices his son is choking, and he's panicking, giving him the Heimlich maneuver. And some guy from across the restaurant comes over and kicks him as hard as he can in between his legs. You know what I mean, right? And the quarter just pops out of his mouth, and the father's saying, "Oh, doctor, thank you so much for saving my son's life." And he goes, "I'm not a doctor. I'm a market maker."
That's awesome.
They'll do anything for a quarter. So anyway,
that's actually very, very analogous to real life. That's funny.
Yeah. All right, buddy.
So if we get back to the reason why I bring this up is because I do believe that at some point in the next 6 years, and I'll give the exact dates in a second, that every 90.42% of the world's currencies are going to be at the exact same point, or we're all in perfect alignment, as we talked about earlier. More specifically, a lot of the rhetoric out there is that they're going to trash the dollar and to bring about some kind of global reserve currency, whether you call it the SDR, special drawing rights, or whatever it may be. That's been the premise. But I'm posing an alternate theory, which is, in my opinion, a more mathematical one. Why would they trash 90.42% of hard work that they've been working on for over a century in order to go backwards and then start over, when they can actually utilize the dollar with everything else pegged to it at 1-to-1 to then bring about some sort of global event? Never before in financial modern history has all the world's currencies been this close to each other and about to approach the same level. And I think it's important for us to take a pause and realize, what are their motivations? What is our ultimate goal? And it starts to become readily clear once I'm about to make my presentation that they're not going to trash the dollar to bring about the global reserve currency. They're actually going to strengthen it and make it the very foundation of the global reserve currency. So moving forward, here is the
very out of the box thinking, Mystery.
It is, but as I showed you,
I like it. I mean, it makes sense. So, from a trading perspective, if you believe this, and to believe something, to trade off of something you think is going to happen in 6 years, you know, it is difficult to do unless you just have a bias every time you see like the euro rally, that you know eventually the grand scheme of things is to take it to parity. So, if you had a great bear market rally in euro, that may have you have a bias to be looking to sell rallies until this is accomplished.
And this is actually this is a 25-year chart of the euro zone. This is a monthly chart, monthly candles. But if you look clearly, the boundaries of this current bear channel are clear cut. I mean, there's been no breaks, it's no false breakouts. It's been holding true ever since 2008, actually, when it peaked. And even technically back tested if you go back to 2004. But what this is showing is, if for those that can see the chart,
everyone can.
Okay, good. The gray dashed line running across the mid-center of the screen, that's actually parity. That's 1-to-1. And then if you take those two trend lines out, the blue trend lines, where those two intersect creates what I call the parity window. So that parity window if we go because the boundaries are so clear cut, we can actually calculate that parity window first opened on September 1st, 2016, and it ends on March 3rd, 2025. That's exactly those dates. That is the window. I mean, it's clear cut as day. And if we look within that formation, clearly on the monthly chart, euro is already in a bearish, is already on a bear move as we speak. The 13 crossed the 50. It failed to break out of the 50. Now it's back down. The Bollinger Center is going to cross back down, and then the bottom Bollingers are starting to curl down as well.
So didn't we almost have that accomplished back in 2017? And I think the pounds low during that, was also, or 08, almost got there. So, I mean,
Correct.
maybe it's not going to take. So what stopped them from the reset then when it was so close with both the two other major currencies, cable and euro? Why didn't they do it in 17?
Partially, I don't think they were ready. Another thing is, part of it could be they have their own hidden agenda for whatever reason. I mean, you never know what's going on through their head. But they may have some specific date they're trying to target. But I think the bigger issue is anytime you have a major flush the way it had, you need to have some kind of a double bottoming formation and some kind of a back test on the top end of the channel. For it to just go straight down without any sort of back test is usually, that's just usually not the way markets happen typically. So I think a lot of it was the trade was probably far too one-sided. I'm sure everyone and their mother was short at the time. Everyone assumed it was going to go to parity. And so of course they're going to rip
under. There's people looking for 90, 80 cents euros, the real euro bears.
Well, we'll get there in a second.
Okay, buddy.
But anyways, this is the parity window. So it's September 1st, 2016 to March 3rd, 2025, which means on euro dollar, that window is now officially open, and it has been for a couple of years. So then what's next? Well, the next major currency is obviously going to be Great British Pound. This is the pound 25-year chart, monthly candle. And if you look here, obviously, it's also racing towards parity. Now, this one has more clear-cut horizontal defined channels, which I showed with yellow, orange, and red. But it kind of gives you an idea of where those levels are. And they're roughly at 140, roughly 142.50, 1725, and then there was another one at 195. Anyway, so this gives you an idea of where we are. And then there's now one at 120. But if you look, every time this had one of these little formations, you have a double bounce, and then you'll have a dead cat bounce off that green horizontal trend line, and then you'll have a flush. Well, this parity window, if we run the lines down, obviously there was a very rare exception in 08 where it just completely flushed the support and had a false breakout. But ultimately, the rest of the channel boundaries have held. And if you look at that channel, that parity window for the Great British Pound, believe it or not, crossed April 1st, 2019, exactly 1 month and 20 days ago. So as of 1 month and 20 days ago, that parity window officially opened for the Great British Pound as well too. And the far end of it goes out to January 1st, 2029, which we're probably not going to have to go out that far.
I have a question for you from a viewer. Can you have a global world currency with other currencies pegged without world political and fiscal union? For example, the euro is having problems with this model because they haven't had a fiscal union.
In theory, you can. Now, that becomes more of a political, philosophical issue for them because they probably want a political union as well, too. That becomes more of a political ambition issue.
That's like the one world government
But
idea.
in theory, the special drawing rights have been open for almost a decade now. So technically, the SDR has been around, and we are already in that state, although no one's really drawing off the special drawing rights yet. There's been a few kind of sovereign debt issues where a few countries had to tap into it. But for the most part, nobody's really – it's not really at the forefront right now.
Thank you.
In theory, we are there already.
Okay.
And then let's say on this specific Great British Pound chart, let's say you want to take a shallower angle. Well, ironically enough, if you took what appears to be the more conservative shallow angle, which I did with the dashed purple line, the window opened up even earlier. So no matter how you look at it, the window officially opened 1 month ago, and now it's ripe for some kind of a test. Doesn't mean it has to have it happen right away, but it means that it's now technically feasible. So if we go there, well, what's the final one? Well, if the euro dollar is dropping and the pound is dropping, but the pound is much higher and both need to reach 1-to-1 at the same time, what would the pound euro chart obviously look like?
Be bullish euro pound, and we had that breakout last week over 86.50. I'm looking 88 first stop, 91, and then 94. I think is possible.
So I'm doing the pound euro, which is the inverse, and if you look at the inverse, the reason why it reversed sharply, if you look carefully right here, was it hit the 50-day moving average on the monthly, which is basically a brick wall. And if you look at the previous cyan circle, which is a similar formation, the same exact thing happened. You had an orange support line, and every time it tested the 50 moving average minus one technical breakout, it held every single time and then eventually crashed. So the monthly chart right now is showing the same exact thing that happened from the 03 to 07 period. And this is the reason why you were talking to earlier, even before I got on, that's why it reversed so sharply, is because it hit such a major long-term trend line. And this is why I emphasize it's so important to keep these long-term moving averages and trend lines in focus, because they're so powerful when they do happen that all of a sudden the reaction off of them is a knee-jerk. So this is exactly what you were just talking about earlier. This is the fundamental reason right here, and that supports your thesis.
Fundamental and technical reason. The fundamental reason being the alignment, the technical reason being your 50-month.
Correct. And it's a 50-month exponential for those that are curious.
Okay.
I only use exponentials. I don't use simples.
Why did you choose 50?
That's a long debate. I mean, it's a complicated, but basically I had a mentor when I was much younger, and he kind of taught me a lot of secrets. Actually 20 years ago to the month, believe it or not, is when I first started technical analysis.
Okay.
And he taught me 1350-200 was, from his experience of his entire career, the most accurate combination. So that's what I use. And I get into that down the road.
That's all right. I was just curious.
Yeah.
And you're blessed to have a good mentor.
Yeah.
Look at what people have to wade through on the internet now to find someone good.
Sometimes, the old world wisdom, it beats new school thinking, a lot of times.
Yeah.
But so anyway, so from this specific chart, obviously this also showed that 08 extreme break, which is obviously an anomaly, extreme, systemic shock. But once you factor that out, everything else held as far as the boundaries of the formation. So if we look at these upper and lower trend lines, well, where does this window open up? Believe it or not, this window opened up March 1st, 2019, 2 months ago. So now all three currency pairs are now officially in their parity window, and these are the bulk of the USD dollar index.
Right.
I think not factoring in the yen, it's almost 85% roughly.
Okay.
And so when you factor this in, so now, and then because this is such a shallow upper trend line, the far end is out March 3rd, 2025, which is way out there. I mean, it doesn't have to go all that far out. But what we see here clearly is when the orange trend line broke back in 08, the reaction was swift and immediately flushed to this lower channel boundary.
And so, this is a much huger formation, which probably has bigger implications compared to the last one.
Correct, it does.
Okay.
So, and these are all. I mean, they're all 25-year charts, but because of this is actually the pound euro, which I think is the most important part, because in order for parity to happen in specific windows, pound has to accelerate to the downside faster than euro. And the reason why I don't think this is purely coincidental, I think a lot of this is by design, is I find it very coincidental that as this is all happening in the long-term charts, that Brexit all of a sudden came into the chatter. I mean, to me, I think—
Great point.
I think Brexit is being used as a vehicle to accelerate this movement. Because when you think about it, what best way to trash the pound versus the euro? Create a quote-unquote hard Brexit or hard systemic shock, Now, geopolitically, they may want to keep the union, but central bankers, I would not be shocked if they want this chart to accelerate to the downside, because the sooner everything gets to parity, the sooner they can achieve their objective.
Got it.
So to me, Brexit ties into all of this, and I don't think it's coincidental. Whether or not, from the political standpoint, I don't want to get into that discussion because that's a long discussion. But purely from a monetary and technical analysis standpoint, everything is lining up. Fundamentals, long-term technicals, it's all playing out exactly almost as they wanted to or intending to. So based on these, this is basically, here we go. I kind of discuss, where the actual dates are, where the window is for each of these specific pairs. And if you take like a Venn diagram, you take the overlapping region of all three, that gives you the highest degree of confidence interval or accuracy. That's where the window is going to happen. So if you take the latest of the first three and the first of the last three, you get that Venn diagram overlap. And that's April 1st, 2019 to March 3rd, 2025. Now, this is obviously a 6-year window. It's still a wide window, but it's important to note that before you can have any kind of global monetary reset, there has to be a preceding global recession or global systemic shock to then justify some kind of a change. Because if things are great, nobody's going to voluntarily change unless they have to. Whereas if you create some kind of a global systemic shock where, let's say, what if another systemic shock happens and they can't do another QE because there's just no political will, or the balance sheets can't support it. Well, then what's the next avenue? Well, obviously, instead of going to a national central bank, they go to the international central bank, which is the Bank of International Settlements in Switzerland. So ultimately, I think that's how they're going to bring about some kind of a monetary reset. Now, does that mean it's going to be Mad Max Armageddon? No, but it doesn't need to be. In order for a global monetary reset to happen, all that happens is that all the currencies have to be in alignment. And in my opinion, because the dollar is the strongest peg, or the sun in this analogy, they're going to have to push pound and euro possibly even beyond parity a little bit in order to incentivize them to then go with the stronger option. Because if it's just 1-to-1, it may not be enough. They may have to push them beyond that, and in order to convince them, hey, you need to come on board. And so I think you could actually see an overshoot of both British pound and euro to the downside below 1-to-1, ultimately sometime within the next few years, in order for them to somehow rationalize or justify, utilizing the special drawing rights.
Wow. Okay.
So again, this is kind of out there stuff. It's very esoteric, but I think it's important to understand the backdrop of where is the global monetary system, and making sure that you're going to be most likely on, risk reward on the right side of that trade. Because ultimately, the last thing you want is to be fighting, long-term monthly trends, as we just showed on the, the pound euro, or the euro pound, which completely shot off what appeared to be some imaginary level, when in reality it was literally in the charts, in the monthly charts. It was textbook. So it's important to, kind of zoom out, take a macro perspective, and then how does the rest of, the financial world play into this? How does China, how does Bitcoin, gold, futures of the currencies and whatnot, how does it all play in? Well, I think, a lot of people misunderstand the China story and what actually happened in China over the last 30 years. People assume that the real purpose of their expansion was, altruistic and to help the country and whatnot, but realistically, they have major geopolitical ambitions. And the purpose of their great economic expansion was actually at an attempt to become the world's global reserve currency. So what did they do? They tried to expand their monetary base exponentially as fast as they possibly could. If you look at debt mainly in China, if you look at any metric you look at, they basically tried to ramp their currency, the base of their currency, as much as they possibly could. Why? Because in order to support a global economy, you have to have an extremely large currency base. It's the only way you can do it. And the only way you can print money without entering Venezuela is to back it with economic growth. Ultimately, they basically compressed 250 years worth of growth that we had and tried to do it in 30 years. And they thought that in doing so, they could expand their currency base large enough to then become the global reserve currency. Well, if we go back to this chart right here, after the trillions upon trillions of dollars that they spent, all the ghost cities, bringing 350 million people out of poverty into the middle class, after all these unbelievable technological and infrastructure revolution that they had, they're now still at 1.89%.
Great point.
If they, and for those that are curious, as a part of the SDR basket, they're actually at 10.92%. Now, how do they get to 10.92%? A lot of it was probably fibbing. The other part was it includes their gold reserves. It includes a lot of other monetary assets. They basically threw the kitchen sink in order to get that 10.92% out of the SDR drawing rights basket. And a lot of that has to do with their economic prowess more so than their actual currency base.
Yeah, and what was the motivation to go with that number by international bankers?
A lot of it, I mean, they do have a very large gold reserve. That's a part of it, but that doesn't anywhere near fill that gap.
It's like a dog and pony show on an IPO. I mean, it's really not there, but there has to be a reason, at least psychologically, why
I think
they wanted to give China that latitude.
I think given they are the largest country by population, they have the second largest military. I think in order to appease them from a geopolitical war standpoint, I think they had to kind of,
or recognition that they're a rising power and Western countries are declining.
Correct. But that narrative, let's take a pill of reality, a dose of reality right here.
Okay.
We're at 61.69%. They're at 1.89%. So those that say the yuan is going to take over the world, people don't understand that yuan is a closed currency. You can't gain access to it. And so is their economy. Ironically enough, the biggest mistake that China made, and this is, as with all communists, their own arrogance, they assumed that they could have their cake and eat it too. They assumed that they could shut everyone else out of their economy, but then somehow grow their currency base large enough in order to then become global reserve currency. Well, obviously, the China monetary experience was a failure. Now, from an economic standpoint, they succeeded socially. They made a profound change, but they didn't get anywhere near their target. I mean, nowhere close. And it just goes to show you cannot cheat time. The old expression, cheaters never prosper. You can't cheat 250 years of organic growth like we had into a 30-year period, no matter how hard you try. Even if you're pushing double-digit GDP growth, it's just not possible. You physically cannot grow the currency base large enough. And
just like you can't push the time it takes to gain experience to be a good trader. How many years did it take before you had a breakthrough in trading?
I mean, at least 4 or 5 years.
Okay, it's like a college degree.
Basically, yeah. It is a college degree. I mean, and you got to pay your tuition, and that tuition is usually 6 figures.
Yeah, Ivy League. Not community college. You did it.
If you want to be great. It takes great losses.
All right, good one, buddy.
But yeah. So when you look at this chart, it really puts everything into perspective. And keep in mind, 2018 was the first year they actually reported this. If you look, all these are empty before that. So this is a new. I thought for the longest time it was at around 5. They're at least probably 5 to 6%. But the fact that they're not even at 2%, it just shows you the magnitude of the problem. So people that say that the dollar is going to implode and the yuan is going to take over the world, they just don't understand the way the Chinese, both the currency and their economy is structured. Ironically enough, their biggest mistake was they should have opened up their economy and their currency much sooner, but they waited too late. And now there's no way they can play catch up in that regard. I think that's why they realize that, and that's why they've stopped trying to inject so much liquidity into their systems. They realize you just can't do it. They can't get there. So they realize, well, let's at least negotiate a good percentage with the SDR. If you get a good percentage with the special drawing rights, it gives you more of a platform on the global stage than trying to actually physically grow the yuan. And then in many ways, that is really the only major difference between a Venezuela and China, is that they both printed money exponentially. But the difference is when you back with economic growth, you can actually justify it from a currency standpoint, and you're actually able to maintain the value. And unfortunately, what's going on in Venezuela is tragic, and it's a horrible, humanitarian tragedy. But it's also a monetary experiment gone wrong, and it's important that we always be reminded, the Weimar approach, it never works. You can't just print your way into success. You have to back it with something. And although, people often say, and I hear this on alternate financial news media and whatnot, the dollar is doomed. It's we're a paper tiger. Ironically enough, in many ways, it is China, ironically enough, that is the paper dragon. They are the paper dragon because they just had their roaring 20s, and they're on the cusp of their first major financial correction in their modern history. And you cannot have, just as Ludwig von Mises said, you cannot have a massive expansion through monetary growth without a subsequent correction of some kind. And the longer you push it off, the more painful it becomes. Ultimately, when you have, Adam Smith said the invisible hand guides the market, and he was right. And when you have a communist country dictating what parts of the economy should succeed and what should fail, it creates a lot of systemic imbalances within their own economy. And those are things that you can't just brush over with, printing money. A lot of them have to come to fruition. And it's not only just from a financial standpoint. You just from a societal standpoint, you have too much pollution, you have too much waste. I mean, physical waste. I mean, trash. You have, they're basically the equivalent of a bodybuilder that's injected 10 syringes of steroids on methamphetamines, and they're basically going to bench press their heart out until it explodes. I mean, that's basically the best analogy I can come up with. It's wow. You're juicing yourself to the absolute limit of breaking. And I think, they say their GDP growth is 7%. That's a complete fabrication. I think realistically, from the numbers I've seen, there's somewhere between 4.6 and 4.8%. For the people that really follow. Within the decade, they'll be to where we are at around 3.5%. So the massive China growth story that everyone's been touting, that's over with. I mean, the law of diminishing returns has already kicked in. Okay. So at that point, where does that move us forward? I think the way they're going to fill the gap, and this
your presentation is creating a downpour here in San Diego.
Okay.
Well, I haven't finished building my ark. So, go ahead, buddy.
But anyways, back to the outline here. So how does it tie into the next topic, which is Bitcoin? Well, I think the way, and they've already hinted at this, I think the way that China is going to fill that gap is the PBOC wants to develop their own nationalized cryptocurrency. And I think that's the way they're going to fill that gap largely, because ultimately, I think we're moving in a transition from private cryptocurrencies to nationalized sovereign cryptocurrencies. And I think that's kind of the topic we're going to get into next is, Bitcoin, cryptocurrencies, commodities, how does gold tie into this debate? And I think before we can kind of get into that debate, we need to establish what is a currency and what is a commodity, because I think there's a lot of misconception and a lot of misbranding, so to speak, of what's really going on in the cryptocurrency world. Technically, in my perspective, gold is not a commodity, it's a currency. It is as liquid as any currency, it meets most objectives of currency. You can put it in a digital form, but ultimately I view it as being a valid currency. And if you take off 3 decimal points, this chart doesn't really look any different than any other currency. In fact, it's been less volatile lately than a lot of currencies have on a percentage basis. Yeah. So when you look at it from that standpoint, it is M0. It is the monetary base of the global system in essence. Now, Bitcoin, in my opinion, is actually a commodity. And the reason I say that is because it still doesn't meet a lot of the metrics for what a currency should be in the technical sense of the word. Its value is still too volatile. It fluctuates way too much. It's still not an efficient medium of exchange. Mining it has become incredibly energy intensive. There's just a lot of structural issues that are, granted, it's in its infancy, and I'm sure it'll get there. And I'm not bearish or bullish Bitcoin. I'm not taking either side of that debate. I'm just looking at it from an analytical standpoint. What is a commodity? What is a currency? And I think originally, when maybe people may not be aware, Bitcoin originally was called BitGold. And I think the reason they pivoted from BitGold to Bitcoin was more a marketing exercise and a rebranding than it was any fundamental change. And the reason I say that is because if you physically buy bullion, it's actually not taxed at the same rate as normal long-term capital gains. It's actually a hybrid 40/60 under the IRS tax code. So I think a lot of that was also a tax liability issue. I think they kind of tried to rebrand Bitcoin as something other than gold because they didn't want it to be tied to gold. They want it to be a currency. But the problem is,
and gold has been declining. How about that too? When it was, during that period.
Correct, it was, and this was obviously during the whole financial crisis and whatnot. But I think the bigger issue here with this is that when you look at both, first we have to look at, to get an honest perspective. I know everyone thinks Bitcoin is going to replace gold, but let's take a step back and look at the hard numbers. Right now, the only way to figure that out is to look at total market capitalization of the entire cryptocurrency world and the entire market capitalization of gold and compare the two. The entire crypto world has a total market cap today of $198 billion. 159 of that is Bitcoin, okay? And Ethereum is 25, and the rest of them are a bunch of single digit in the millions. Single digit billions. Gold, there's 131,700 tons on planet Earth that has been mined and is above ground. At 32,000 ounces per ton, that comes out to exactly $7.07 trillion. So on a market cap basis alone, gold is 35 times the size of the entire cryptocurrency world. And that does not include the exponential derivatives market on the COMEX that's on top of that. That's just pure physical bullion. So once you bring on, the however many millions of contracts that are exchanged every day, they trade more on a daily basis than is mined in a year. So once you factor in that multiple factor, once you get, it becomes exponential. So 7.07 trillion is M0 of gold, basically. It's the base. And then from there you have the derivatives. Okay. So you begin to understand the scale is the problem.
It's huge.
Yeah, and again, I'm not knocking coin holders or, I don't want to offend anyone. I'm just giving some perspective here. You have to look at it from that standpoint. And I think actually they understand this because, ultimately they realize it's not an efficient medium of exchange. And that's why they had that hard fork and they had Bitcoin Cash now, and you're having these other offshoots. And ironically enough, before we can continue this discussion, we actually have to talk about the history of gold. And the reason is it will tie back into what Bitcoin is happening today. For those that aren't aware, fractional reserve banking was not created by central bankers. It was not created by money changers. Ironically enough, the most illegitimate financial experiments usually come from the most legitimate sources. I repeat, the most illegitimate financial experiments often come from the most legitimate sources. What do I mean by that? I don't mean that in an offensive way, but it was gold bullion dealers in Great Britain in the 1100s AD that created fractional reserve banking because they would give out more deposits than was physically in their vaults. And they knew this, but no one else knew it. Inadvertently, they had created what is now known as fiat or fractional reserve banking. And that was gold bullion dealers. They were the ones that created it.
Interesting.
So I know gold bugs today love to hate on, central banks and fiat currency and whatnot, but ultimately they shot themselves in the foot because it was the gold bullion market that created what is now the exact opposite of the bullion market, which is paper currency. Well, how does that relate to Bitcoin? Well, in many ways, it's perfectly analogous to Bitcoin today. Bitcoin, had it just been Bitcoin and nothing else, that 198 billion market cap would have all flooded into one specific crypto commodity, which is what I'm going to call them. The problem is, first you had the hard fork, and then you have Ethereum, then you have Litecoin, and all of a sudden now you have over 1,000 offshoots, all of them ICOs, none of them regulated. Today's cryptocurrency market, for those that are old enough to remember, is very reminiscent of the OTC BB pink sheets market of the late 1990s.
I bring that up all the time, and they're promoted all the same way.
I mean, the same charlatans, the same promoters, like
they pay people to come in and do volume.
Pump and dump. Yeah, pump and dump. I mean, this is the oldest trick in the book. I mean, I've been on the sucker side of that trade for the first few years when I was trading. Trust me, I was involved in the pink sheet world. Little did I realize how foolish of a of an experience that was. But
that's why they put it on the bulletin board. Don't buy them on the bulletin.
And the scary thing is the pink sheet OTCB pink sheets of the 1990s and early 2000s, those were SEC regulated and they were still toxic junk.
Right.
That's terrifying when you think about it, because none of these ICOs are regulated, none of them are verified.
Blinder and Robin, remember?
Yeah,
Colorado.
I remember. I mean,
all right, go ahead. Blinder and Robinson,
classic pump and dump schemes. I mean, just textbook. And for those that weren't old enough to trade that, they don't remember that time. But I mean, I'm getting I get deja vu all the time looking at it now, like, oh my God. I remember, then you start thinking of all the ticker symbols that you got screwed on.
It's like a flashback on a bad acid trip.
Oh God, it's horrible.
Go ahead, buddy.
But you get my point. And to, ironically enough, in a lot of ways, they shot themselves in the foot, because as a global community, cryptocurrency world or crypto commodity world, chosen just one asset and put everything into it, it would have been better. But just like any, the tulips or, fractions, or maybe any time you have an innovative new idea, what happens? Supply comes on like a flood, like a tsunami. And once that supply comes on, it completely changes the marketplace and prices collapse. Now, I know obviously in the last week, we've had a big ramp up, and, there could be more pops and drops, but ultimately, when you're splitting that pie 1,000 ways under all these different currencies, it actually hurts the entire cryptocurrency world. If there were more of a unified, central body, then that could have probably been avoided. But, in order for cryptocurrencies to move forward, ironically enough, they should want to be regulated, because it is the lack of regulation that's causing a lot of these problems. Okay. And I think that's something that doesn't get talked about a lot. If you want to make it a legitimate currency, that's great. There's nothing against that. But, you need to have a lot of the framework in place that a lot of other legitimate currencies have. Okay. So once we get onto that, I think kind of the next, where do I see cryptos moving forward? And I think this is kind of the more important topic. Obviously, we know where we're at now, but I think there are going to be some challenges in the cryptocurrency world moving forward, more so because I think federal governments and sovereign nations, this is too tempting of a fruit for them not to pick. And at some point, they're going to want to come into the fray, because that temptation is simply too great for them to avoid.
Because it's complete control, no cash.
Not only is it complete cash, but
it's control. So they know, every purchase and sale that's made, rather than there being, it makes it tougher to have an underground economy.
Here's the irony. The irony of the cryptocurrency world is they think that it's completely hidden private transactions that no one knows about, that's completely protected and they're secure and it's outside of government control.
Anonymous, Like
in reality, it's actually the exact opposite. And
like you.
Yeah, exactly.
You're not a you're on F.A.C.E now. You're not a mystery.
That's right. That's right. Ironic that I'm on Face and I have a mysterious face.
I didn't even think of that one, buddy. All
That's
right,
a good one.
all right. Yeah.
But when you irony, it's funny. But I think at some point over the next, let's say 5 years, whatever it may be, they're going to have some type of a forced transition, a metaphorical confiscation, some kind of forced taxation. What I mean is not in the literal sense. You can't physically confiscate a coin because you have the cert or whatever. But I think for those of us that remember this, what is it, about 7, 8 years ago, for those that have foreign bank accounts, in 2011, the United States Congress passed FATCA, which is the Foreign Account Transaction Act. Basically, it forced all central banks, all banks all over the world, to report all accounts to the IRS. And at that time, this was during the whole Swiss banking secrecy scandal that came out between UBS and all the other Credit Suisse and whatnot. And at the time, there were tens of thousands of secret accounts in Switzerland. Well, did the U.S. government go and confiscate those accounts? No. What did they do? Well, you might know this, Dale. How did during the Prohibition, how did all the mobsters and gangsters actually get caught by the federal government?
Tax evasion.
Exactly. It was never law enforcement. There was no shootouts. It was the IRS. The government came in, pointed a gun at him. In that case, they arrested him. But basically, they came down on him. Well, in the 2011 FATCA case, what happened was they basically pointed a gun at every financial bank in the world. It says if you don't comply, you're locked out of the SWIFT system or the U.S. banking system. So obviously, they complied. What did they do? They reported it. They gave everyone an amnesty period. If you report your account before this time, there'll be no criminal penalty, no civil penalty. You just pay your taxes owed, and you're all in the clear. What's to say they won't do the same exact thing with the cryptocurrency world? Because right now, staggering majority of crypto traders have not reported any taxes on their gains, if not almost all. And the way the IRS works is they don't come at you the second you don't pay your taxes and come to your door with handcuffs. No, they give you 3, 4, 5 years of rope. They just give you more and more rope until you build the most elaborate noose to the point where you screw yourself over. There's nothing stopping them from doing the same thing they did in the FATCA case with the cryptocurrency world. What is to stop them from coming in and basically saying, look, if you don't report your taxes, if you don't do this, not only will there be a civil penalty, there could be a criminal one. It's tax evasion. What's going to happen in that scenario? Well, a lot of people are going to have a huge tax bill that they weren't anticipating, which means how are they going to pay for it? They're going to sell a lot of their cryptocurrencies. So in many ways, it's going to put downward pressure on the crypto market because all of a sudden, they're basically coming after crypto, not to mention the SEC could start heavily regulating a lot of these ICOs, which they probably will here pretty soon. So once you start to look at that legal, sovereign backdrop, you begin to understand, well, what is going to fill the void? In my opinion, I genuinely do believe Fed coin is coming. Right now, there've been hints about it. They've been kind of murmuring about it. There's no proof that it's actually coming out yet, but at some point, I have a feeling they're going to come out with their own, Federal Reserve version of the cryptocurrency because the temptation for them not to do so is simply going to be too great. And if China, the PBOC, starts their own cryptocurrency, obviously there's going to be a political onus to get on that train as well too, because they don't want to be left behind in that sense. So to me, at some point, again, this is all theoretical right now. There's no basis in fact at the moment, but just where I see the markets going, I don't see why not the Federal Reserve or the federal government can't create their own alternate, which will then become the official cryptocurrency, and then a lot of the others will go by the wayside. So to me, that's kind of where I see the crypto world going. I don't know if you want to chime in on what your perspective is on crypto.
It was very edifying to hear that. So I learned, and it's interesting. I always believed that maybe at first, just like Modi did, outlawing higher denominated paper, that might be a first step here in the U.S. too. I mean, turn in all your hundreds.
I think obviously they want a digital world, and I'm actually glad you brought that up, because we didn't talk about the other side of it. Is that everyone thinks that their account or their supposed cryptocurrencies and their coins are all completely anonymous and private, when in reality the federal government has already openly admitted that they've already decrypted and roughly 85% of all crypto accounts. They've attached them to actual users. So 85% of all crypto traders, the government already knows what you're trading. And the way they got this is the SEC went after the exchanges. They went after the actual exchanges because they knew they could get, at some point there is a paper trail between you and your account and the coinage. And the irony is,
you're performing also, besides a very intuitive, insightful a presentation here, Mystery, really a public service.
Correct.
For people that might get in trouble thinking they're getting off free, and they found a way to avoid, you don't have to use the word evade, taxes, and do the right thing today, and tomorrow takes care of itself.
Yeah, and as I was saying, like when you have a situation where the government, like I said, they're not going to come after you right away. If you can report now, I highly recommend doing it, because at some point they are going to come after people that haven't. And at that point, if they do come after you, it's way too late, because you're 3, 4, 5 years back. At that point, it becomes evasion. It's no longer a civil, oh, hey, pay this plus a percentage, interest on top of it, when you delay your taxes, but they're actually just going to come after you legally. And I would hate to see a lot of people think that they somehow circumvented the system, when, ironically enough, cryptocurrencies is the greatest panacea law enforcement has ever seen. It is the greatest thing that ever happened to law enforcement, because the second they attach your name, your social security number to an actual crypto account or crypto coins, there's now an official legal public record been verified by millions of machines during the mining process that this is in fact true, which basically means in the court of law, it is as binding as granite. You literally cannot argue that one away, because ironically enough, it is the Bitcoin ledger that's going to hang you, because you literally cannot, for those that aren't aware how mining works, every machine has to verify every other transaction that has ever happened before, meaning millions of mining machines have verified your transactions and when you bought, when you sold, what that taxable event was, and that's recorded throughout the entire history of time, meaning they don't have to go back and get records from financial institutions and whatnot. They basically, it's public record. They can literally come after you with the Bitcoin ledger itself, and that's all the incriminating evidence they need.
Wow.
It's terrifying when you think about it, because that has a lot of implications,
Yeah.
From I don't want to use the word because it's kind of tinfoil hattish, but from a tyrannical standpoint, that basically gives the government full control and full access to everything. That's the more kind of a scary road that I don't want to go down. But you need to think,
you got it out there. All right.
Yeah.
Don't think that you're clever.
Yeah, exactly. Like they
because there are even coins that's their selling angle, is their anonymity. I forgot the name of it.
That's a load of. First off, by law, all the exchanges now are already having to report to SEC. So if it's a legitimate exchange, the exchange itself will, or the account holder, or whatever you want to call it, wherever your account is, that's how they have 85%. Within the next 2 years, I would be shocked if they're not at 99 percentile. They're going to get everyone's name, and they're going to know who's trading what and when they're trading it. So the whole, ironically enough, what was originally sold, again, back to my quote, the most illegitimate financial experiments come from the most legitimate sources, meaning
that's really interesting.
The intention of Bitcoin was to be a private world outside of government control, outside of anyone's access.
Help people that don't have bank accounts get banked.
And ironically enough, it actually ended up inverting and turning it into the exact opposite. It became the ultimate system of control from central banking, from governments. this is why they don't hate the idea of cryptocurrency. They just want it to be their own. They want to be the ones in control of their own currency, and that's the irony. They, ironically enough, basically those original 8 that coded the original Bitcoin code, they basically handed the ultimate tool to central governments on a silver platter and said, "Here it is." And
Scott's saying they can't game the system either. With some link, Masari iOS at FedCoin, something like that.
it's not about the set number of coins will be set. That's not the issue here. I agree. There's a finite quantity, whether it be 21 million or 84 million coins or whatever that set number is as a part of the code. That's not how they're going to cheat the system. The system how they're going to cheat is by it being their own system, they're going to support it and ensure that it goes up, over time exponentially. That's their goal.
Can I just get one thing that just going back to 11 with the gold debate? If we're looking at the reset window that you're talking about and the dollar getting stronger, could I assume that during that process, gold could continue lower and trade under $1,000 an ounce?
So, this is actually, I'm actually glad you brought this up. So Henrik and I actually have this discussion quite a bit. We talk privately a lot, and, he's an Elliott Wave guy. I'm not. We have very different methodologies, but the reason I respect him so much is he's very sharp, he's very analytical, and I'm a firm believer, kind of like Napoleon Hill said in his book, your mastermind group. He's in my mastermind group, and you always want to have someone in your trading mastermind group that has a completely different methodology, because if you have 2 completely opposed methodologies coming to the same exact conclusion, then you're probably on the right track.
That's what we have here at ForexAnalytix. We have guys that do harmonics, guys that do Elliott.
Exactly.
Really.
No system is illegitimate. No is more legitimate. They're all just different methodologies, and whatever you feel most comfortable with, that's what you should go with. As long as it produces accurate results, that's all that matters.
Yeah, Schwager said, find a trading style that suits your personality.
Absolutely. And there's nothing wrong with that. But we've crunched the numbers back and forth, and based on where we both see the DXY going, our targets were shockingly very close. His was 890, mine is about 935 dollars per ounce.
980 was a high in 1980, January 1980. That was the end of that bull market.
Correct.
When Russia invaded Afghanistan.
Correct. And
anyway,
but that puts, based on originally when I made the calculation, that was at a 107 DXY. Heinrich says 109. So that's where the discrepancy is. If based on what I'm going to show you now, it's possible we could actually get a little bit higher than 107. So it may be kind of in that ballpark. That will be a generational low, and that will be an amazing buying opportunity, assuming we get there, which I think we will.
Okay.
But based on all the charts that I've shown you between, this one, the euro, showing the parity window, this is the Great British Pound US dollar, and then now, the Great British Pound Euro. In order for all those to come true, which it looks like they will, by definition, the dollar has to appreciate. And so all the currencies are also supporting this thesis that, commodities, the bear market for commodities is probably not over yet. Now, we're in a bit of a lull right now, but ultimately, I think in order to I wanted to show one final chart, and this is actually my favorite chart out of all my charts. This is actually the current US dollar index, the same 10-year chart, but instead of a monthly candle, it's a weekly candle. It gives you a little bit more accuracy with regards to the MACD and the stochastics. That's why I use the weekly on this one. But if you look at it, this is the all-time high of gold right here. Is roughly in the middle of 2011. This is the most recent gold high. I mean, it's night as day. It's inverse of what it should be. And more importantly, when you take a look at the stochastics, the MACD, every major dollar boom that has happened over the past decade has had a very clear-cut, distinct pattern. It has an initial spike, a hiccup, and then it ramps up, and it has some kind of single or double top. You can see the pattern over and over again: hiccup, pop, drop, here again, here, and it happens every single time. And these are my custom MACD indicators.
Okay.
These are all been refined over many, many years. Now, every single time.
Are we going to have an analogous event in this blue circle that we had from 11 to 13, or are we going to have one of the classic indicators? I would guess you're thinking we're going to get what's in the green circle coming now instead of what's in the blue circle now.
Well, actually,
all the greens.
I think before we look at the actual specific chart, let's look at the stochastics as well. Because if you look at the stochastics, it has usually typical, the greens are accompanied with a double top as such. And if you look here, here's another one, double top and then drop. It's same cyclical pattern that it always has. Mm-hmm. Now, the only time in the past decade where it has not done that is this pattern right here from 2012 to 2014. Yeah. Now, if you look, clearly it's essentially an ascending triangle, slightly skewed on top, but essentially it's ascending triangle. Had initial touch of the purple line, dropped back once, touched again, and then dropped through. Then it back tested, pulled back a little bit, and then immediately ripped up. If you look, the stochastics are making the same exact pattern as it did in 2012. It's actually a little bit more aggressive, but nonetheless, the pattern is the same.
So can I assume by your green circle, you're looking for some type of pullback to 93 before the bull market resumes?
Correct. And if we look at the MACD here, you had a double peak here with a lull in between, one last peak, and then you had a consolidation. We already had the double peak here. We're now in the bit of a lull. Whether or not how sharp this next spike has to be, it doesn't have to be very big. But ultimately, when I look at this chart, to me, this views as a consolidation period. And from peak to trough in this period, it actually took a full 2 years. From July of 2012 to July 2014, peak to trough is when it happened. Now, from green circle to green circle in this one, it's actually 3 years. But if you look at this cycle, it's actually truncated. It's a faster cycle this time. So we recently peaked here. We actually attempted to break through the magenta 4 times now. It's failed 4 times.
Yeah.
Now, remember, the first 3, I think let's take a step back and look at where we are in the Fed cycle. The first 3 attempts to break through the magenta center line, which has been a very solid boundary over the past decade, we were in full hike mode. I mean, full hawkish, full hike, 3-4 more hikes coming down the pipeline, dollars ripping. And even with that extremely bullish tailwind, it had trouble breaking through that magenta barrier.
Right.
All of a sudden, this past month, Fed pivot. It pivoted. It went from full hawkish to no hike to maybe a cut to maybe one more hike later this year, which was probably just saving face. To me, it's now in fundamentals. It's an even harder backdrop to break through this because you don't have that endless hike cycle coming down the pipeline. So, to me, I think right now we have had a recent pop in the dollar, and I know the daily and monthly charts look bullish, but it's important to take a look at the bigger picture. I have a feeling DXY is lagging the actual market conditions right now, and I think at some point it's going to play catch up. When it does, that's when I think we're going to have some sort of a consolidation. And if you look at the same exact cyan period, where was the 200-day moving average? Well, it was, roughly right around here. And it ended up. Look at where we are now. It's the same exact thing. The 200 is 94. Right parallel. Yeah. So it's 94.05 now.
Yeah.
It could drop a tad below that, which is, I think, put it at around roughly a 93. And based on this indication, it's saying, I think this cycle will actually be 18 months peak to trough instead of 24, which would put us at around April of 2020 is when it would get into this green circle. March, April. And so, and from that point on, then we can establish some kind of a huge ramp, and then that's when we'll get some kind of an exponential pull. Now, what would justify this if there's no hike cycle? To me, I think this next cycle, this next spike is coming from some kind of Eurozone crisis. I think that
Deutsche Bank.
Some kind of it's not going to happen right away, but there's going to be some sort of systemic crisis that's going to force the dollar to ramp up, because the Eurozone is 57.6% of the US dollar index. That means it is the lion's share of the USD. So the only way you're going to get some kind of a major ramp is somehow the euro gets hammered. Based on our previous charts, which we posted right here, that also goes in line with the thesis that somehow we need to have some kind of a correction at or even below parity. Now, does it have to happen right away? No, we could have a situation where the euro bounces to the red, has one more rising channel similar to here. So you had a double bottom, rising channel, and then fell through. So we could actually fill out a lot more of this channel if we have to, which is basically a descending triangle.
There's a gap at 105.80 from the Macron election that looked interesting to me.
Correct. And so I think right now this hard support, this red line right here, is at roughly around 104 and 104 handle. Okay. So right around 104, 105. So we're kind
of a great interview, and you know what? You have a record for a great interview.
Thank you.
And longest.
I apologize. I know I'm taking a long time.
No. I'm just saying it's a new record. You can apologize to our editor who has to render this on YouTube. It's going to take Bellu a little bit extra time, but he said, it's like the team spirit we have. Dale, that's okay. Don't worry about it because it could be great information that people need to get. Is that a good attitude? Yeah.
I appreciate it. Yeah. Thank you so much.
All right. And it is.
Yeah. And I think this is, again, I'm just trying to point out, this is the only currency chart I have left is the last chart. But okay. I just want to say where we're at, in the entire cycle. And now, if we cannot break through that magenta center line, which is around 98.5 roughly, it's in the mid 98s. If we cannot break through that this month's candle and next month's candle, odds are that should confirm we're in a cyan consolidation cycle.
Okay.
And in that scenario, the best advice I can give to currency traders is it's going to be a very choppy market. So when you have your trades, when you have your rips, take them, lock in profit, move on to the next trade. Don't hold for the big moves. If you're trying to establish long-term swing trades, now during this period may not be the time to do so. You got to, when you have your plays and they run, just take them and move on to the next one. Don't be greedy. Right. Is the best message I can give if we are officially in a cyan consolidation cycle, which may confirm here soon. And then ultimately back to the final topics. I know this is an important topic to you. Just my overall perspective on technical analysis, faith, how all this ties into, where each of us is obviously different. I don't want to get into the topic of religion specifically, but, I'm a firm believer as, I have faith in God. And I think, in many ways, faith can be a powerful force in trading. I think obviously you went through a very troubling experience, and as the old expression goes, what doesn't kill you only makes you stronger. And I'm sure you can relate to that, Dale.
Yeah, buddy.
And it's what you do is amazing, and we all appreciate. It takes a lot of hard work for you to do what you do with your broadcast. But I think more from a mathematical standpoint, my perspective on faith is that God is omniscient. He knows everything, and the reason I believe He knows everything is because I believe the future is already written. God has a destiny or plan for all of us. We don't know what it is, but I'm a firm believer that the future is written and He's the one who's written it. Now, outside of a religious debate, how does that apply? Well, technically, if you want to get philosophical, if God has written the future, then that means every single market turn that's going to happen already exists.
Okay.
So if technically the future is written and every market future turn already exists, technically there should be hints of it somewhere in the tape. You got to figure out how to read it. There's hidden signs everywhere. Most of the time we dismiss them as just coincidence or random hearsay or whatever. But I believe there is a grander design to the universe. There's, as a trader, you can.
He was a mathematician.
Right? You can't. Obviously, it's impossible to predict the future 100% of the time. It's just not possible. But there are signs and there are hints everywhere. If you pay close enough attention to the data and the numbers, there are ways to use technical analysis to your advantage. And I believe, this is. I'm just going to kind of end on that note that if you believe that you can do it, and you believe in technical analysis, and you believe that you can have a successful career as a trader, you will, if you were willing to put in the time and the effort and work hard and have great information like you guys provide at ForexAnalytix. If you don't believe it, then honestly, it's probably never going to happen, because ultimately, by definition, faith is a self-fulfilling prophecy. You have to believe in yourself, believe in your capabilities, and know that, as Steve Jobs said, anyone who's ever done anything great in the world was no smarter than you are. We can all do it. It's just, you just have to believe in yourself and put in the hard work and the hours. And, at that, nothing can stop you. I mean, the world is your oyster. So with that said, Dale, I want to thank you, obviously. I really appreciate you bringing me on. I apologize for taking up so much of your time.
I tell you what, time filled with this type of from the heart and from the mind and from your mind's eye, this kind of information is priceless. So I guess I have to say that it was Providence that made you my trading warrior brother now, and
Absolutely.
I'm really glad that God knew Twitter was going to exist, and we were going to meet, and we were going to do this interview, and I hope to have you back. I know you're putting together a website to help people out, and really a pleasure meeting you. Really, and thank you so much for bringing you brought enough pearls into our community today for us to string a necklace.
I hope so, God willing.
Yeah, you did, man.
I appreciate you mentioning my site. For those that are listening, if you want, I'm starting a charting school here soon, just to, an educational program for those that want to learn how to do technical analysis or help or get, academic coaching, just how to do charts properly. I'll be, if you want to follow me on Twitter at MysteryTrader99, just sign on and follow me, and I'll be releasing announcements here soon. It's just to help people out. It's just kind of my way of giving back to the technical analysis community. But I wanted to thank you again for bringing me on, Dale.
All right, let me just give you a couple reviews. Kareem said, great interview. Hats off to both of you gentlemen.
Thank you.
Stefan said, long dollar is such a crowded trade right now. Pull back before rip makes sense.
Yeah.
Rick says, super awesome interview and guest. Thanks. Ben Maldonado, who is someone that I interview. Great interview, exclamation point. Scott Henderson, he's one of my Eagles. Awesome job, Alex. And BB says, amazing presentation. So the reviews are in, and it's green.
Thank you so much, Dale. I really appreciate it. And thanks again, everyone, for being patient.
And thank you for unraveling mysteries today, Mystery.
That's my job.
All right, buddy.
All right, good. Take care,
all
man.
right. Good hunting.
God bless. God bless.
All right. Okay, that's it, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. Thanks for hanging out. And if you missed it, it'll be out on video after Belu gets it done. Probably take him several hours now. You're welcome, Stephen. Adios, everyone.
I appreciate it. Thank you. Bye.
See you, Alex. Adios.